Good afternoon, everyone. Welcome to this week's episode of my YouTube channel. This week, I wanted to give a little update about what's going on in the Dayton real estate market, some things that we're seeing, and some trends that we're looking at. So we got some good news this week. Speaking to one of my lender friends, we found out that inflation has stagnated and gone down, and as a result, we're starting to see a decline in rates, or a projected decline in rates, thanks to inflation kind of cooling off. We're looking at the Fed backing down on raising their rates, and although mortgage rates are not directly tied to what the Fed does with their rates, it's more tied to the 10-year Treasury bond. Those bonds are somewhat affected by inflation and what the Fed decides to do or not do. So we're looking at inflation going down, hopefully, and along with that, we'll see rates going down heading into the next year. As the way the lender I spoke to put it, hopefully the worst of it is behind us at this point, and we can start to see a decline in trends. Now, unfortunately, there's some good and bad to that. The good is that you'll be paying less each month on your house thanks to the mortgage rate going down. The downside of that, though, is that it's going to open up more competition in the housing market. And as has been the case all along, supply has not been able to keep up with the demand that is there. Even with these higher rates, we're still seeing a steady supply, or a steady amount of demand. And the housing market has just not been able to keep up with inventory. Just not enough listings are popping up on the market. So what that means then is when rates go down, more people will be out in the market to buy a home. So you'll see increased competition. You'll see more buyer concessions. You'll see more of those special things in the contract from buyers trying to land a house with the increased competition. Whereas lately it's been really slowed down and there's been a more advantage for the buyers, but we'll start to see that trend somewhat shift the other way heading into next year and into the spring. Not a ton. I mean, as we've said, those rates that were in like the 3% range, they're not coming back, at least for a long time. Just the current market trends will not allow for that. So what you're basically going to be seeing for the time being is lower rates in a more normal range, maybe in the 5 or 6 range. But that will also mean then that there will be increased competition for these houses until housing supply catches up, which until the new builds start to creep up, that will be a minute before that happens. So all in all, there is some good news for buyers that you'll have a little bit more flexibility to work with when it comes to buying a house as far as rates go and what your monthly payment will be. But look for increased competition as well. And if you're planning to sell, I would start looking at the spring. Maybe get your house ready now. Start thinking about where you'll go after selling. But if you've been considering selling, I think heading into next year in the spring might be a great time to look into it and make that step. I hope this is helpful. Hope you have a great Thanksgiving holiday. I'll see you next time. Thank you.